Hi, I'm Amber with Atlas Services, here to discuss additional ways businesses can improve cash flow. Past videos have focused on negotiating payment terms, prompt invoicing, payment follow-up, and payment incentives. Now, today we're going to discuss alternative funding options. Alternative funding can be a viable solution for improving cash flow, especially when traditional financing may be limited or unavailable. The benefits of alternative funding is the speed and flexibility that they're offered when compared to a traditional loan. Many options can be available within a matter of days versus weeks or months for a traditional loan. This video will focus on exploring the benefits and types of alternative financing options available to business. Now, it's very important to note that the options mentioned may not be a good fit for your situation and that there are alternatives out there to explore. There are many options for alternative financing available to small businesses. The first financing option, which I strongly believe all businesses should have, even if cash flow is not an issue at the moment, is a revolving business line of credit. This line of credit can be drawn upon as needed, offering flexibility for businesses with fluctuating cash flow needs. Now, there are multiple other options, and a few of them are invoice factoring, which is the selling of outstanding receivables to a third party at a discount for immediate cash, which can provide quick access to funds and while not having to wait for clients to pay. Another option is merchant cash advances. This is when you receive a lump sum in exchange for a percentage of future sales paid by credit card. This can be useful for businesses with steady sales and daily transactions. Another option is crowdfunding, which is when you're raising money from a large group of people, typically through an online platform, to finance a specific project or a business initiative. Another option, if it's available to you, is a capital investment or a loan from the ownership of the company. The ownership can inject personal cash into the business as an investment or as a loan. Now, if it's done as a loan, you'll want to make sure that you have everything documented just as you would a loan from any bank or anything like that. That includes repayment terms and interest. Now, I'm sure you're wondering why someone would think about alternative financing options other than a line of credit. Knowing other options allows businesses to make smart decisions when an unexpected cash crunch arises. This could be due to seasonal downturns, waiting on customer to pay outstanding invoices, or paying for emergency expenditures. Funding can also come in very useful in the event that just timing is off. For example, there could be payroll needs to be paid on Friday, and a client payment is scheduled to come in, but not until Wednesday of the next week. Having a line of credit, for example, to borrow against temporarily, even if it's just a couple of days, could make a huge difference when it comes to management or ownership sleeping peacefully at night. So here's a few more examples of why those other options could be useful. So if you have significant current accounts receivable and don't qualify for a line of credit, invoice factoring might be a good option for you. This will allow the business to maintain daily operations, pay salaries, invest in new projects without waiting for the clients to pay. Now, the catch with factoring companies is that they take your current accounts receivable, nothing past say 60 days outstanding, and then they reduce that by a certain percentage, which is how they get paid. So instead of interest through a traditional loan, they get paid the difference between how much they pay you and how much the clients actually owe. Now, for a merchant processor loan, an example of that could be a restaurant that needs a cash advance to fund renovations or purchase additional supplies. So they're able to obtain a loan from their credit card processor, which gives them that influx of cash to take care of what they need, which could help them attract more customers, leading to increased sales and improved cash flow. It's important to compare different options, especially in regards to the interest rate, the fees, and the repayment terms. When in doubt, speak with your CPA, your bookkeeper, a trusted confidant, your financial advisor, just to make sure you're thinking through all situations. Make sure to discuss the pros and cons of each option when selecting the best option for your situation. It's also vital to make sure that you are able to maintain the repayment plan with expected cash flow cycles in the future to avoid additional financial strain. Alternative financing is a part of a broader financial strategy to ensure business stability. Taking proactive steps today by researching options, consulting experts, and planning for responsible repayment to secure financial health and business growth, we are preparing for the cash needs of today and also in the future. I do highly recommend, if you haven't already, reach out to your banker, even if you don't have a cash need right now, just to see if you're eligible for at least a minimal line of credit in case the need arises in the future. Please let me know if you have any comments or questions and message me with anything you want to learn additional about cash flow. Thanks.